afternoon. What a great conference. My name is Teresa Foxx, and I'm the COO of Banco de Crédito y Inversiones here in Miami. I'm also a new board member for the Greater Miami Convention and Visitors Bureau. And we are so excited to sponsor here today, as well as support the crypto and new technology industries. As a matter of fact, the Greater Miami Convention and Visitors Bureau has established a Miami FinTech Council. This council is to work with industry professionals to deliver an annual Miami FinTech Convention and Trade Show here in Miami. We're also working very hard to source venture capital initiatives, as well as provide relocation incentives in an effort to be a catalyst in creating the new Miami Silicon Valley for FinTech. There's a lot happening here in Miami in the crypto space. And the Greater Miami Convention and Visitors Bureau is so excited to be in the center of it all. And I'd like to pause for a moment and take an opportunity to recognize our chair of the Bureau Board, Bruce Orosic. I'd also like to pause and recognize Al West, our CFO for the Bureau, as well as Al Baptista, our VP of Convention Sales. So like I said, the Greater Miami Convention and Visitors Bureau is your partner in FinTech and also in crypto. With that being said, this session on crypto and the new technology will definitely be an informative session for you all. Our moderator, as well as our panelists, have a great deal of knowledge to share and impart today. So it's my pleasure to introduce the moderator, Mark Ciccarelli, who's the first Vice President, Portfolio Manager, and Financial Advisor at Morgan Stanley. Since joining Morgan Stanley in 2009, Mark has focused his efforts on relationship development and creating customized asset allocation solutions for select individuals, families, and businesses. Mark's clients are game changers in their own professional endeavors, and he is a designated professional within both Morgan Stanley's Global Sports and Entertainment Division and Workplace Advisor Division. In addition, he is one of 4 equity partners that make up the Seminary Group, which manages $2.5 billion of client assets with a specialty focus on young, affluent clients that are often celebrities and probably some people you've seen in the public media eye. Prior to joining Morgan Stanley, Mark founded a global nonprofit organization called Conquer Together, an online-based organization that connects those who have been affected by unexpected illness, both directly and indirectly. With respect to community involvement, Mark is active in organizations such as Tomorrow's Children's Fund of New Jersey and the CLRC of Loyola Law School. I think I'll also share with you one of Mark's latest accomplishments. Mark has been named Forbes' top next-gen advisor for 2022. So I think that deserves a round of applause. That is hot off the press. Now, with respect to our panelists today, we have John Abraham, our managing partner and CEO of Atomic. We have Peter Smith, co-founder and CEO of blockchain.com. And we also have Jim Esposito, COO of MoonPay. So thank you very much, ladies and gentlemen, and I will leave you now with these extraordinary panelists.
Thank you so much, Teresa. Good afternoon, everyone. We'd like to bring a little energy to the crowd. It's 3 o'clock on Tuesday afternoon, and I've got some of the smartest people that any of us will ever know sitting to my left. I know that because I spent the entire weekend watching YouTube videos of them speak publicly. And let me tell you, I got more and more nervous as it went on. As Teresa mentioned, I've been with Morgan Stanley for about 15 years now. And I've always thought that you need an exceptional idea. You need something that's innovative. You need to be on the cutting edge to be able to differentiate yourself in the investment space. In my world, that's always been historically IPOs. It's been unique alternative investments or the ability to take a company public. But in these gentlemen's world, they've shaken everything up over the last 2 years, and I can't tell you how many client conversations I have that they say, what about crypto? What about NFTs? What about smart contracts? How do I invest in the space if I want to get behind a company here? So what I would like today is to talk to them both about what they've seen from the past, how they got here, because they saw it far before all of us, and also get an understanding for everybody in this room where we're going. Because the future is now, and there's a big shift happening right now, and we're so blessed to have these gentlemen next to me. So the objective here is multifaceted. I left this thing knowing that I was going to come in and learn a tremendous amount. I think that each of these gentlemen have taken a different stance in the space. So I want to cover from, let's say, the early start, call it 2010-ish, from to now, maybe even before. But I know that there were pieces of this part of your businesses that were challenged at times, that there were naysayers, and I think it kind of all came to roost the past couple of years. So I want to hear some of the I told you so moments as well. So without further ado, our panelists. And I'd like you to each start with an introduction about who you are, what company you represent, and your cutting edge, your personal cutting edge. Jim, you want to start? We'll go down the line.
Absolutely. Hey, everybody. Jim Esposito. I am the Chief Operating Officer of MoonPay, based out of Miami, Florida, although a hybrid global company. MoonPay started about 4 years ago and started in a very predictable spot for crypto to help customers convert their preferred fiat using their card of choice into their preferred crypto, into non-custodial wallets. So very simply, I have $100 US, I want to convert it into Ethereum or into Bitcoin, and I want to self-custody. A fairly typical starting point for a blockchain company. In the last year, MoonPay has actually ventured into the second chapter of the company's business, which is quite exciting. Is around Web3 infrastructure, and we are a leading Web3 infrastructure company. Really, Web3 is all about smart contracts. It's about empowerment, decentralization, giving back control of data, value, property to individuals away from the mega companies. So MoonPay has a technology called Hypermint, which is all about scalably deploying smart contracts and giving that power to all the top 5 Fortune 500 brands that we all know and recognize. They envision the change that's coming. They want to make the transition from Web 2, the current world, to Web 3, where we're headed. And they're looking for partners like MoonPay to help them think about the strategy and then use the right tools to execute upon that. Thanks, Bart.
So my name's Peter. I don't normally wear sunglasses at events, but I have light sensitivity. And in 10 years of public speaking, this is the brightest lights we've ever had. So I'm sorry I look like an asshole.
It's pretty cool.
But this is the only way we're going to make it through an hour up here. So I got started in crypto in 2011, which is just a really long time now. It's like my whole adult life. And the first thing that I did when I got involved in crypto was join this website called bitcointalk.org. And this was the first place to trade Bitcoins. You would just kind of post offers on this website. And met a lot of other people who really cared about Bitcoin back then. And we started building tools together. And that idea, that sort of collective became blockchain.com. We got our start in building infrastructure and products to help people use Bitcoin more easily. And in a lot of ways, we're still doing that today, just for about 1,000 cryptocurrencies. But today the business is spread out all over the world. So we have offices in Vilnius, Lithuania, London, Miami, San Francisco, Singapore, and a couple other places. And we work for about 40 million retail clients all over the world, and then about 2,000 institutions all over the world as well. In 2021, we transacted about 1.1 trillion in value, and we converted several hundred billion of fiat into crypto over the last 18 months. So ultimately, what we do at the end of the day is just provide access to the crypto financial system for consumers, institutions, companies, et cetera. We're probably one of the single largest sources of fiat to crypto liquidity in the entire market, and do that via banking infrastructure that spans about 200 countries around the world. I think, in crypto, this is now my fourth cycle. There's only two of us that have been through 4 cycles that are still employed. We'll see if I can make it through cycle 4. And Brian and I from Coinbase, we were talking about it the other day, like what have we learned from all this, right? And I think the biggest thing that we've learned is there's no better time to be building than when everyone has lost faith. It's the single best time to be building, to be investing in crypto. Like this is kind of counterintuitively the golden era of crypto that you have the year in front of you. Because most of the really bloody pain is probably done now. Like a lot of the bloodletting has occurred. And now we get to rebuild. It's kind of the analogy I use a lot, which Floridians can understand, is a hurricane. Like a hurricane in the few weeks after a hurricane really sucks. But then there becomes like a really kind of interesting period of renewal after that. And the crypto market goes through that every 4 years. We're in that period of a renewal right now. And it's just the absolute best time to be investing and building in the crypto space right now.
Great, and great to meet everyone. My name's Jack Abraham. I'm the founder and managing partner of Atomic. Atomic is an investment firm. We're actually a hybrid. We make investments, but we make investments into companies that we start. So it's all thesis driven. We put together the teams, we build the products, and we scale the companies up. We do some stuff in crypto, particularly at kind of the infrastructure layer in building, but we do a lot in regulated industries like healthcare, finance, and fintech. We do a fair amount in commerce and AI, and we're very fluent at the intersection of all of these technologies and how they matter, and how they're going to come together in the future in interesting ways. I also have personally been an investor in crypto for a long time. Was an early investor in Bitcoin in like 2012, and I actually was a seed investor in the Luna Terra project, so I saw the huge run up and then run down of that and have some views and opinions on that, as well as a number of other very interesting projects like Brain Trust, if some of you know about that, or Ironfish, always at the very seed inception of the project. So I've seen a lot of crypto projects from the inception and them go through their own cycles and have my own views, and happy to share those as well.
Excellent. Thank you all. I'd like to dig into each of those answers individually real quick. Jim, you mentioned NFTs versus smart contracts. Could you expand on that so that the audience understands the difference in your specialty?
Sure. So I think folks here have heard the term NFTs probably ad nauseum throughout press, throughout circles, et cetera. And I think NFT, non-fungible token, is oft narrowly associated with digital art. Could be punks, could be apes, et cetera. And I think in one aspect, that may be right, but I think that's also like describing the baseball game in its entirety by talking about the first inning. And I think that's actually a little myopic and a little narrow. In my mind, the concept of a smart contract, that's the foundational technology that's happening right now. The ability to deploy a contract, in the manner in which you want, the ability to modify that metadata and then control and manage that as a creator, as an IP holder from front to back is really powerful. And to do so in a decentralized manner is something that we haven't really leveraged and seen in society yet. So I think the concept of a smart contract is far more interesting. That's the foundational technology that is underlying a lot of the blockchains that we're seeing today, and actually points to a much more bright, expansive future of Web3, where individuals can finally take control of their data, take control of their information, their value back away from the mega corporations, the big brands that we all know, that get vilified these days, those Web 2.0 brands that are taking your data and monetizing it. So I think the concept of smart contracts, the position that we have in the future to deploy those and manage those and empower consumers, sort of the quote Rage Against the Machine, to take the power back and give it back to individuals, is a revolutionary concept. So I think it's important to distinguish the two, because if we talk about NFTs, we often get stuck in, why is that piece of artwork $100,000? I think that's too narrow. I think to look at the bigger picture of smart contracts is a far more interesting foundational technology.
Wonderful, thank you. And Peter, in your answer, you mentioned you've got a retail platform as well as institutional. Which came first, and how did you bridge that gap?
Well, retail came first because, when we started building our website, there were probably only like 1,000 people interested in crypto in the world, and definitely 0 institutions. So, yeah. So 2012, 2013, 14, there's 0 institutional interest in crypto. That started to change in 2017, 18. And we started building the institutional platform in 2018. Today it constitutes about half the business by revenue. And so it's really a massive business for us. I think over time, we'll probably see institutional revenue normalize towards 20 to 30%, just because I do believe that retail is a fundamentally bigger market opportunity. But the institutional side is definitely the fastest growing market segment in crypto over the last 4 years.
Excellent. Thank you. Jack, you have, when I was listening to one of your interviews recently, you were talking about the studio fund model that you built, which seems to separate you from the rest. Can you go in depth on exactly what that looks like and what that means to everybody in the crowd, please?
Yeah, absolutely. So I started a new model kind of in the venture capital industry in 2012 with my own capital. I had started my first company, Milo. I went to the Wharton School. I dropped out to start it, and I sold it to eBay when I was 24 years old. I had 2 years to work at eBay. By the time I was ready to leave eBay, I had 250 potential ideas for my next company. And I'd gotten really good at forming teams under me to build products while I was at eBay. So I figured, it must be possible to do this with startups. And you must be able to do it in a way where you can de-risk ideas, you can test them before you build them, you can build a methodology for really understanding risk behind concepts before allocating a lot of time or capital to them. So I started Atomic with my own capital in 2012. We raised our first fund in 2013. It was the first of its kind, this now studio model. We invented it for the technology industry. There are now 700 studio funds around the world spawning companies. And a lot of what we've built has been an apparatus to take concepts. We now have, almost up to 1,000 ideas that we have internally, and we have this rigorous process of putting them through a system to really validate or invalidate them and determine not just whether or not to build them, but how much time, energy, and of our fund's resources to put into them. We're on our fourth fund. We invest out of funds that are several $100 million in size each.
Wonderful, thank you. I'm curious, given Peter's answer, talking about the cycles and trying to get past the next step and the next phase, right? There's 3 people representing 3 wonderful companies that are still standing and pushing strong. I'm curious to know why your peers, many of them are folding up shop or haven't made it through this cycle. Is it because of the longevity of their business? Is it a different approach? So I'm interested also in this inflationary environment, if you had a pivot earlier this year, or you were well prepared, and just try to get an understanding of, how you have that strength. What are the traps out there for people that are building companies in this space, and how have you each been able to avoid them? Jim, you want to go ahead?
Sure, take that first. Really tough environment right now. I don't know that I've ever seen in my life the convergence of such significant macro conditions all at once. High inflation, supply chain challenges, global conflict, central banks adjusting rates at rapid pace. It's really sort of breathtaking to see all these things converging all at once. On top of that, I think it is really unfortunate for employees, investors, founders, shareholders, et cetera, for those companies that didn't make it. I think that's a real shame. I think that's also the hard truth about innovation and about this part of the cycle, where you're going to have certain players that are just going to flush out. So again, it's unfortunate for those that are affected, but I think that's the harsh reality of innovation. I also think that's where opportunity is Peter had said earlier, hey, this is a build market, not a bear market. I actually like that phrasing way better than bear market because it's far more optimistic, and I 100% agree. This is a time to focus and to build and to execute. So I think companies like MoonPay see that opportunity. We were really fortunate with the raise last December, a really record raise. That was a signal, I believe, to the industry, to investors, that Web3 infrastructure is more than just a fad. It's a thing that's going to permeate our society pretty substantially, well beyond financial services, where I've spent the last 20 of my 28 years. That's pretty invigorating to me. A much larger TAM that even I had originally anticipated. Back to your comment about, what advice would you give founders? I think that during this time right now, you got to build that product. You got to iterate, listen to your customers, make sure that product market fit is superb. You got to listen to them. And probably most importantly, especially for this space that has had more than enough examples of distrust, I think you've got to build that trust with your consumers. You've got to secure it like hell, and you've got to make sure that you're maintaining it well. The space that we're in, I think, has had some unfortunate examples of a lack of trust. So I think building great products, exceptional products, building that trust with consumers, maintaining that trust is critical. And that's something that's super top of mind for us at MoonPay right now.
Excellent. Thank you, Peter.
Yeah, so it's interesting. I don't really count a crypto company as being a real or serious thing until it's survived 2 cycles. So I kind of view them as like, oh, like that's interesting. And like then I wait and see. And the reason is because crypto is very violent in both directions, and they can both sort of kill you as an operating entrepreneur. Being an investor in crypto is actually kind of easy, at least over the last 10 years. Like everyone looks awesome, although very few people have outperformed Bitcoin or ETH, so it kind of depends on your benchmark. But being an operator, being an entrepreneur in crypto is really hard because to the top side, you have incredible sort of appreciation and growth in your business. How do you keep up with that? Right? Like we've had a year where we grew by 1,300% in a single year, and we were already a 9-digit P&L business, right? So like, that's crazy. That's like, you don't see that in any other sector. Now at the same time, we've also been through multiple environments where the environment contracted by 80% plus. And so these sort of violent swings can create operational issues that kill you in both directions. And I think navigating through that and doing it across multiple cycles is sort of a testament to how robust your crypto business is and its management team. So to make that really practical, people have a habit of like overscaling in their second cycle and a lot of times underscaling in their first one, right? That's a really hard balance to get right. Headcount, operating cost, et cetera, and so forth. There's also a lot of not particularly great risk management in crypto. And I wouldn't even say that people are doing a bad job. People are just not used to a world in which an asset class moves up and down by 80% in 4 months. So if you hire people from Wall Street, from New York, and you say, hey, build me a risk management system, they probably build one that's totally fine for equities or commodities. But equities and commodities do not move by 80% in 6 months. Like that just doesn't happen. If the S&P 500 goes down 80% in 4 months, we're probably all becoming farmers again, right? So in crypto, that happens every 3.5 years, right? And so the risk management side of crypto is very, very, very challenging. Now, I actually do believe in bear markets. I just happen to think that like the last year was kind of the bloodletting. And what do you do in the bloodletting? You reorient your cost structure as rapidly as possible. So beginning, February of this year, we started reorienting our cost structure. We will then start investing probably Q1 of this coming year. But being very early to cut is really, really important because it enables you to bring back productive resources later. The last thing I'd say about crypto, and it's kind of a point you made, is that consumer trust. That is established over a long period of time in crypto. And it's the most valuable thing that a crypto company like ours has, that we've been doing this for a decade and we haven't, blown up our customers. There's nothing more valuable than that. And so you have to honor that contract with your customers above everything else. And so when you're making the hard decisions about where do you invest, what do you cut, what do you do, it always has to come back to how do we honor the contract and the commitment that we have with our customers.
Sure. I see Jack nodding quite a bit down there. Can you add as well?
Yeah, I think having built across so many different industries, one of the things that's fundamentally different about crypto that's worth knowing and understanding is if you're an entrepreneur and you have a great idea and you decide to do it in the crypto space, one of the flaws I would point out with crypto is the team gets paid before it works. So just imagine you were signed up to build a house and you collected all the money before even building, the front door. That's kind of a problem that's recurring in the crypto ecosystem. It's great for the teams in that they can, make a lot of money really early on, but you don't see a lot of effort carried through or long-term vision across the projects. That's kind of the exception rather than the rule. And that's really what these bear markets do, is they can shake out the people that are really, truly like long-term oriented and believers in what they're building and what they're not. One person I know fairly well and have some good experience with is actually Vitalik, who created Ethereum. I used to run the Thiel Fellowship for Peter Thiel for a period of time. We gave him his initial $100,000 to drop out of college and go and start Ethereum. And, he has a long history of thinking through all the things he wanted Ethereum to do. He had this very long-term thought about, man, Ethereum is going to solve all of the world's problems and allocate all of this capital into all of this social good ultimately. And, he saw one of the primary use cases of Ethereum emerging as NFTs, and he hates it. He absolutely hates it. So it's very difficult to predict what is and isn't going to catch on in crypto. But, that's one thing that I think is worth watching as we come through this bear cycle, is who's really still in it and still really actively building and sticking to a long-term vision. Because to build things that are really important in the world, you need to have a long-term vision and you need to complete the work.
I will say though that, I've also been investing in crypto projects since 2012 and crypto companies. And there was a fundamental sort of alignment change. Not every crypto project do the people working on it get paid before they build the door. In my case, I have never taken any liquidity out of the company, and I'm 10 years in. Some people have, obviously.
Well, you're the exception. So
10 years
that's
in.
kind of what I'm saying.
Yeah,
there aren't very many long-term.
But the point that I would make is all of this stuff comes down to the incentives that investors agree on with entrepreneurs. And one of the things that I saw shift very radically in 2021 was investors not requiring long lockup periods, investors not requiring vesting periods on protocols. Part of the reason that investors didn't enforce that wasn't just a very competitive funding environment, but was also that investors were flipping the positions as rapidly as possible. So a lot of VCs in the space, they would agree on a very short lockup with the founding team because they also wanted to flip the position very quickly. I think a lot of that's going to come out over the next year, and that's going to really make people reevaluate how a lot of the investing activity in the space works and a lot of the disclosure side of it as well. I think Masari is working on a really good project on this stuff. But I think as an industry, if we just insisted on longer lockups for both investors and entrepreneurs, we'd be in a lot better position. I was also a seed Terra investor back when it was a payments network, not a high yield stablecoin. And, the incentives there got really misaligned by the later investment rounds. And I think it's one of the sort of fundamental issues in our space right now is that we aren't insisting and disclosing sort of the lockup schedules well enough.
As I was speaking to the teams and we were coming up with ideas to share up here, I didn't want to spend a lot of time on regulation. You just kind of hinted on it. For each of you in your respective companies, what do you foresee are going to be some of the hurdles coming up? What do you do you have a wish list of how it should look? Because regulation is obviously spoken about quite a bit, and that's a big, I would say a lot of the naysayers that you see, the pundits out there that are anti-crypto or Bitcoin or the space in general. How do you foresee the landscape looking in the next couple of years, and what would be advantageous to your companies? We could start, Jim, go ahead, we can go down the line.
Sure. So I think in this space, regulation is not only inevitable, I think it's important and it's needed. Why? I think it's the right thing. It's a good thing to protect customers so they have disclosures, they're familiar with products. So I think reinforcing those kinds of guidelines is really important. I think it's also important to flush out bad actors. right? So what we've seen, I think, in this space, obviously, are some of the usual regulator names going with enforcement actions, going very aggressively after bad actors, and I think that is inherently a good thing. I'd add on top of that, what I think I'd like to see, and I think you'll hear similar things from my panelists here, would like to see more clarity and guidance around something simple. Example, what is a security? Is this particular digital asset or token a security or not? Is it really just a Howey test that I need to pass? Are there other qualifiers? So I think that kind of clarity the industry would welcome. Right now it's become quite an expensive problem where you've got to spend money on internal and external counsel to try to assess, on this one dimension, security, not a security. And I think clarity, concise clarity from regulators, whether that's CFTC, whether that is the SEC, et cetera, would be welcomed. I think the industry has been asking for it. So it may very well be a case of be careful what you ask for. Sure. So I think it's a healthy thing. It's coming. I think those that embrace that, lean into that, will fare well. And I think ultimately it'll be good for consumers.
Peter?
So we are definitely not short on regulation in the crypto space. As someone that holds I think our company now holds over 50 licenses, probably on the upper end of 50. The challenge in crypto right now is that everyone is your regulator because no one is sure exactly who is your regulator. So what I mean by that is, right now we work with CFTC, SEC, OCC, FinCEN, it goes on and on. I won't bore you. But really what would be great is to just know who the regulator is. I would really settle for that in the United States. It's actually a lot better in Europe and Asia. The licenses are really challenging to get in Europe. But if you're a big company like ours with lots of compliance people and lawyers, you can get it, and it's kind of a moat. In the US, it's not even about that. It's just kind of a general state of confusion. And so clearing up that confusion would be super great. I think the other thing would just be consistency. We would like to follow the rules, but we would also like everyone else to follow the rules, because otherwise we're at a business disadvantage if you're trying to do things in a regulated sort of up and up way. So it'd be nice to get sort of consistency across all the verticals. I do think it's getting a lot better. We have full-time public policy teams in DC as well as Brussels and Singapore. And generally speaking, the conversations become much more constructive as well as much more action-oriented, particularly in the wake of the sort of major meltdowns of the last year. I think regulators are very concerned with actually getting something done now, which is going to be short-term painful, but long-term productive.
Excellent. Thank you. Jack?
Yeah, I completely agree. I think if there was certainty around what you can and can't do, just simply what is permissible, what is not permissible, it would be extremely helpful in this industry, because you also have to contend with presidential administrations change, new people get appointed to these agencies. They might want to make a name for themselves by going after people in the crypto industry. So what was explicitly permissible in the past might no longer be permissible. And there have been cases where people who have built in this industry have gone to these agencies, have gotten explicit permission to do something, and then someone new comes in who's in charge and actually gives them, not only a lawsuit, but potentially criminal charges for something that they had approved to do. So it is a really, really, really big problem in this industry. And it's actually one of the reasons why at Atomic, we have not built anything that involves tokens. We do things in crypto at the infrastructure layer or at the coding layer, but we will not do anything related to tokens because it's just not worth risking going to jail for doing tokens.
Jack, could you explain that a little bit more to the audience, what the tokens represent?
So the issue with the tokens are, there's just not a lot of certainty around what may or may not happen to you if you issue tokens, how you issue them, how you go about doing them. There is more certainty than there was before. There are law firms now, thankfully, that actually are really good in crypto that you can engage, and they're pretty expensive, but there are ways that you can go about doing it, but you're not entirely shielded from the risk. And there is risk, and it's almost the more successful you are in this industry, the more risk there is for you. So it's an interesting dynamic that exists here.
Yeah, it's It's definitely something that you didn't see coming in 2011, 2012. It's like the bigger you build the firm, the more customers you help, the more risk you will have across every metric, legal, personal safety, kind of goes all the way across. It's sort of ironic. But on the token side, you can get around all of that very easily. You just drop your US passport and move to Europe or the Bahamas or something. But the reason I make that joke is actually a serious one. The lack of clarity in the United States puts the US at a serious disadvantage in terms of innovation. And historically, one of the things that has kept America a global economic leader is our innovation in capital markets. And if we do not receive clear guidance on what entrepreneurs can do and not do in Web3, it is going to disadvantage the US economy. And so I think that when I talk to regulators and policymakers, the number one point that I make is, look, just because we haven't figured out how to do that here in the US doesn't mean that other countries haven't figured it out. And the longer we wait to issue clear rules and clear guidance, we're just increasing our own, inability to capitalize on a huge center of innovation. And so, hopefully we're able to make some progress there over the next year or so. But it's a real danger for the US market right now, because that paragraph that you kind of gave is very true about America, but is not true about most other countries on Earth, which is why you have things like Ethereum, which was basically built by Americans and Canadians, but has always been Swiss, right? And that's kind of sad. Like, Ethereum should be American, but it's not.
I think this is a really interesting question. If you think about this conversation, it's mostly centered around digital assets, tokens, et cetera. But if you think a little bit more broadly around where Web3 is headed, how does this apply to a POAP? A POAP basically is a proof of attendance, meaning I showed up at Universal Studios, I showed up at the park, I scanned a QR code, and I got a unique identifier proving that I was there riding that ride. Is that a security? So I think when you start to step back and look more broadly of what's happening and the power of Web3 technology and what you can do with smart contracts to really power amazing consumer experiences, you start to scratch your head and go, is this a security? Is this a token? And I think to Peter and Jack's point, there's a lot of innovation that's going to occur there that's going to be very good, very positive for consumers. And if we don't have clarity around regulation, that could really stifle a lot of the innovation. That, the biggest brands they're sort of beyond skepticism. A lot of what I've seen in the last few months has been openness to say, hey, MoonPay, we get it. We see Web3. It's coming. This is not, hey, tell me how, whippersnappers, tell me how this Web3 technology is going to change my Web2 strategy. No, these are brands that we all recognize, we use, that we love and embrace, that are saying, I see the future. I see disruption. It's coming. I am not going to be the laggard. I need to be the tip of the spear. I just don't know how should a strategy look? How do I execute? What do I do? So this is a much broader problem than just, is this token a security or not? So I do think when you broaden it out to look at smart contracts, not just NFTs, but smart contracts in general, it becomes a really important question. And I'd hate to see our country disadvantaged by a lack of clarity to stifle something as simple as, hey, I received a token for attending a certain ride as a memorabilia and a way to deepen engagement with the super customer.
I think we've all been surprised, though, about where that line might potentially be. Like, there was a couple years where we were like, well, NFTs are safe. They're definitely not a security, which is it's kind of a reasonable interpretation, I think. And then like 6-7 months ago, we all found out that the #1 NFT project was under SEC investigation. And I can tell you, like, we work with some of the biggest household names in America, and that definitely, just put the cold water on the NFT project, because they're like, whoa, wait a minute, we do not want an SEC investigation. And I was like, fair play, let's see how it settles out. But I think that's where it just comes back, where that clarity is so important. But hopefully we can get that clarity, and hopefully we can stop talking about regulation now.
Yes, we can, and thank you for the collaborative answer. In that same vein, are there any companies in particular that are putting their foot forward and doing a great job, corporations that we all know that are really intrigued and maybe not deploying but learning in the space? that you could speak about publicly, or is that a tougher question?
A lot of fun announcements to come, so I'll leave that teaser. I'll recognize a few obvious ones. Starbucks. I have been in the financial services space 20 of the last 28 years across a number of companies. That is a brand that really gets it, that understands what's happening in financial services and payments and technology. They launched their initiative. That's an interesting one. Here's another one, Tiffany. Here's another one, Nike. Especially with their acquisition of Artifact, a Web3 strategy company. So these are really big, recognizable brands that get it, that see it, that are investing, and that are executing. And a whole bunch of others soon to come.
Excellent. Do either of you have any to add?
I think one thing that is interesting is actually there are brands that see the value in this, particularly like creative brands. They're really starting to invest in some of this technology, but you're still not seeing a lot of the financial institutions or banks. Like I bank with JP Morgan. If you want access to crypto, you can't get it unless you get Bitcoin through some sort of specialized fund, which is essentially like an ETF thing that they offer their clients. I don't know how it is at Morgan Stanley actually, but I'd imagine it's basically the same. We're now more than a decade into this. It's actually surprising in some ways the lack of acceptance, which does create opportunities for other companies that are not in the traditional financial system. But I'm surprised that we're still at that point.
Yeah, this is one where I'm actually more optimistic than I've been in previous cycles. Kind of in past, bear build markets, all of the sort of corporate interest has dropped out. And this one in the last year, which has been, kind of a sad year for crypto, for the price of crypto, we've had partnerships come across the line with Bailey Gifford, which is Europe's largest asset manager, BlackRock, the Dallas Cowboys, the most valuable sports team in the world, I guess, if not America. We've also had big partnerships come across with 2 banks that are unannounced, and then a announced partnership with Visa, where we're doing something really core at sort of the Visa issuer level. All of those projects would have never happened 3 years ago, and the fact that they still came to market, and came to public announcement while the market was just dropping off a cliff from a price perspective, I thought was really positive in terms of the long-term commitment of those institutions to the space, and is entirely different from prior market cycles.
Maybe 2 more things that I might add here. I think the JPM example is an interesting one. I distinctly remember being on the 9th floor at Square in San Francisco, 1455 Market Street, and sitting in on a fireside chat between Jack Dorsey and Jamie Dimon. And 5 years ago, Jamie Dimon, when he was asked about Bitcoin, of course that's going to come up with Jack, Jamie Dimon said, Bitcoin is a fraud. It's an absolute fraud. It's a Ponzi scheme. Fast forward to 2022. What is JPM? Maybe not Jamie Dimon, but what is JPM doing? They've got a Web3 strategy that they're executing. They have increasing opinions on crypto. So I do think the tide is turning. And by the way, JPM, of all the banks, I have to say, as a payments geek, they're actually not that bad. They get it. They understand it. They got tons of resources and assets. Of the large banks, they're actually quite good. So the fact that they've actually turned as an organization and are investing in this direction publicly is shocking, but it's also the right move. If you don't want to get left behind in this space, especially in financial services, you should be investing, leaning in, dipping your toe in, feeling the space out, finding the right partners to do deals with, to learn more about it. Taking risk-based approaches with compliance, with legal, to understand, hey, where can we innovate? Where can we experiment to learn? So I do think that's a really wise move. One more opportunity that I'll share. MoonPay had announced a deal with Flamengo, one of the largest Brazilian football clubs in South America, millions of fans. And there's a tremendous amount of opportunity for us with that announcement around ticketing, merchandise, proof of attendance, et cetera. So there's a really exciting opportunity for us in sports. One of the most popular sports in the world, one of the most popular teams in the world, where they're leaning in saying, hey, want to be tip of the spear, want to experiment, want to learn. MoonPay is the partner that we want to achieve this with. We want to evolve this customer experience across the board. So I think that's another exciting partnership for us specifically.
Can I tell a quick JP Morgan story? Sure. So 6 years ago, JP Morgan shut down my personal account just because they were like, you work at a crypto company, no more. And then we started hiring investment banks for what we've firmly insisted is not an IPO. But I don't know why you hire investment banks otherwise. Anyway, long story. So we start hiring investment banks. We don't talk to JP Morgan. They're like, they get in touch. They're like, hey, like, why aren't we talking? We're like, well, you guys really dislike the Bitcoin. And they were like, no, that's old news. So, all right, okay. We went through their onboarding process first, like faster than all the other really pro-crypto banks, because JP Morgan had a dedicated crypto risk team that fundamentally understood the risk in the crypto market, in the crypto compliance programs, and they were very deep on the whole topic. So yes, there was a lot of like noise about JP Morgan, but the actual people doing the work, they were a year ahead of every other investment bank, a year ago, right? And then what's even kind of more interesting is, investment banks have a lot of conferences. They're a lot like this one. JP Morgan runs the preeminent conference for digital assets and Web3 growth companies. It's in December. This year, Jamie is opening the conference. Like, that's the space of 4 years, right? Is that reversal? And that's kind of the long term of how this whole crypto thing happens, which is, mostly people thinking you're crazy for a long time. You shift perspectives over a very long period of time. And in 20 or 30, we won't be talking about crypto and Web3 anymore. We'll just be talking about finance. And that's the part of this whole curve that I'm excited about.
I'll give one more analogy on this. It wasn't that long ago that we had a very similar discussion, call it 20 years ago, about another emerging revolutionary format. You know what that format was? MP3s. You all remember that? MP3s. Napster, Metallica, file share trading. I'm sure a lot of us had done that. I may or may not have done that. I really think that what happened with MP3s is very similar to what's happening with NFTs, right? It's really not the file format that's interesting. It's really the foundational technology that changes the consumer experience that's everything. At the end of the day, do you really care if it's an MP3? No, you really just care about streaming music. So it's the same thing with NFTs. You don't really care that it's an NFT. You really care about changing the consumer experience, the way you experience brands, et cetera. So I see those two things as quite analogous, and this pattern that Peter had recognized with nascent, innovative, early stage innovation, there's risk. Folks are scared and folks will shy away. You'll have early adopters, then you have late bloomers like JPM, and then until the rest of the world shows up, and then everybody is on board and it's mainstreamed. So I think we're seeing that pattern yet again here with crypto and with Web3. And I think to the earlier point, it may feel like a crypto winter, it may feel like a bear market, but man, it's time to build, and it's time to build really, really well, wisely, sharply, against your plan.
In that same vein, and you guys kind of just answered this a little bit, but do you each individually, representing your companies, have an I told you so moment? Because you've been in the game for a bit, and maybe you speak on Ivan's behalf. You've come across challenges, obviously, and keep pushing forward. And I think that some of those higher ups that speak negatively about the space are not well educated in it and afraid of them to, taking client assets. So I'd love to hear if any of you have an I told you so moment. Jack, you want to go ahead?
I'd say, we have that in a lot of company. Every company that you start, if probably the better of an idea it is, the more people there are that are naysayers about it. And, at a certain point, once it's working and it's really catching on, you get the last laugh when it comes to that. So we've had a lot of those moments throughout the history of our firm. A lot of investments I've made in the crypto space, a lot of people thought were crazy when I made them, and I even passed them along to friends, and they all thought they were crazy and they didn't do them. And, they ended up working out pretty well. So I think this is a space where optimism generally pays off pretty well, and there's still a lot to be very optimistic about.
I think one of the other underappreciated gifts that crypto has, if you're an entrepreneur or an exec in the space, is that you get to experience the sort of peak and trough of people thinking you're awesome to people thinking you're an idiot every 3 years, or every 2 years, I don't know. It's very humbling to be a crypto entrepreneur because There are so many ways to mess up and at scale and very fast because all of the numbers are so big and it's so violent up and down, right? And so I've never really had a told you so moment. I've had really personally fulfilling moments and like very cool moments, but I've never had any told you so moments because I've found the process and experience of being a crypto CEO for so long to frankly be really just humbling more than anything else. Like every time you think you've figured it out, you've mastered the game, some new monster on a new level in the video game appears and you're sort of back to figuring it out again. So never had that moment. I've just had a lot of humbling moments.
I think that's a great word. I think delivery and humility are what really is needed right now. Proving out and showing that these use cases for blockchain, for smart contracts is important. The days of speculation are sort of drifting in the past, and the top shelf brands are looking for, hey, show me a strategy, show me how we can execute this. How do we bring this into real life, and how do we engage our consumers? So I don't really have a I told you so moment. I think I think that like more humility is necessary in this space. I will share this story that sort of for me personally is meaningful. In 2014, I'm a Floridian, by the way, 1 out of 19 these days, I think, which is pretty unbelievable. So it's a rarity to be a Floridian. 2014, I came to the epiphany. I was like, wow, I'm in the shallow end of the opportunity pool in South Florida, my hometown. I've got to either go big or go home. So this either means San Francisco or New York. So my wife and I made the decision, let's pull up the roots, take the youngest granddaughter, and move west to join this series-based startup called Square, led by its eccentric founder, Jack Dorsey. Spent a year there. Went right into the deep end of the pool, leaned right into risk, into discomfort. And that was something that was really foreign to me. But I have a great life partner, and she was supportive, said, let's do it, let's go. 1 year there, said, hey, let's do it again. Let's go to New York. Let's join Etsy for 3 years. Global marketplace, 40 million buyers, 3 million sellers, multiple countries and currencies. Again, leaning into risk, into change. Came back to San Francisco, joined this little rocket called Cash App. Less than 2 million monthly active users, 5-year stretch. All the operations grew to this behemoth, 40 million active users, one of the largest neobanks on the planet. So I've had a lot of interesting change self-inflicted over my life the last 8 years. So when I joined MoonPay, what I saw was, I felt like I'm looking into my broken crystal ball, sort of taking inventory of all this change and risk that I've leaned into and realized, you know what? I think I have some pattern recognition. I think I can see around the corner for what's happening. I think I know what's next. I'm going to make a really strategic investment and bet on that. So joining MoonPay was a big part of that. It was the strategy, the vision, the positioning. Ivan is an exceptional founder. He's a visionary. He paints an amazing picture for the company, for the culture, and we're executing against that. And just even reflecting back on some of the prospective partners that we've spoken to in the funnel, and hearing them talk about how they want to evolve from the Web 2 world into Web 3 and make that 2.5 step in between and looking for a partner to execute, strategize and execute, how could you not pass that up? So I think it's not a told you so moment, but it's definitely an epiphany of leaning into risk, leaning into chance, trusting your pattern recognition, and simply not being afraid. So I think about that in terms of opportunity for myself, but more broadly for the company and for the industry. And I do think in a multi-year time horizon, we will look back and think, whoa, that was a real amazing time to get into this space, because it's going to be normalized. It is going to be main streeted.
Thank you. We're coming in on about 7 minutes here, and I want to touch on one topic, so maybe one of you could just pick this one off. The environmental footprint is obviously something that's talked about quite a bit. Can you share with the audience how to understand the impact that this space is bringing to the environment and what that looks like going forward? Are there going to be controls in place? Are there certain steps that need to be taken, or it is what it is?
Yeah, so there's really only one major cryptocurrency left that still does proof of work, which is Bitcoin. Everything else is proof of stake, which is like cloud infrastructure mostly and pretty minimal environmental impact. So let's just talk about Bitcoin and proof of work. I think there's kind of two takes on this. I can give you the current take and the long take. The current take is it is uneconomical to mine Bitcoin anywhere where there isn't spare power. Like you don't build power capacity to mine Bitcoin because you need it at less than a penny to be competitive as a Bitcoin miner. So Bitcoin mining is only done in places with excess energy I think about half of it is now renewable, so hydroelectric, for example. The challenge of Bitcoin mining is it's really a cost efficiency business. So you're not going to get a lot of, very environmentally wasteful Bitcoin mining. That was true when there was a lot of Bitcoin mining in China. So there's a fair amount of like subsidized or cheap coal as well as hydro. All of that has now shifted out of China and sort of towards hydro all around the world, including the US, which is now the predominant Bitcoin miner. So I think the environmental impact is much lower today than it was 2 years ago. I also think people have to be aware that, if we turned off all the Bitcoin mining in the world today, I don't think pollution would go down at all because it's all spare power capacity anyway from a pricing and an economic standpoint. In the long run, I have the very unpopular view that proof of work could be replaced even on Bitcoin because of just the economics of it. I think if proof of stake is working on other networks for a long period of time, you are likely to see a lot of pressure for the way mining works on Bitcoin to change as well, particularly as Bitcoin mining becomes increasingly industrial. Because as we all know from like economics school, anything that is a cost efficiency business tends to centralize over time. And what we've seen is the miners centralize more and more and more through each cycle. So you have bigger and bigger miners every cycle. That is long-term a problem for Bitcoin. And the solution to that is probably a move away from the PO SH256 algo. So I think it's going to be kind of a self-healing problem over time, but I don't view it as a huge one today.
Excellent, thank you. The space is changing a lot of things, including marketing, and each of you are building your own brands, and Jack, you're building brands within your brand. I'm curious how you've adapted or found strength in influencer marketing, for example, or aligning with unique people that are sharing your brand. I'll tell you the coolest thing that I've ever done is sit next to you three gentlemen. But I've seen and studied your companies, and you align with some very unique individuals, and I think that goes viral. So just curious how you've pivoted each of your companies to market in today's world with a new product, obviously.
I think that education is really important. And I think that's very distinctly different than, the type of marketing that you're talking about. I think there's a number of high-profile examples that we could all talk about where so-and-so was fined by the SEC for not revealing that there was a sponsorship for a certain token. There are examples like that, and we should anticipate that there will be more examples made like that. I think what is important for this space and what's positive for this space is really great education. I think that's really powerful. I think that's very much needed. I think that's welcomed. And I think that you've got to align yourself with the right partners to achieve that. And I think it's distinctly different than influencer marketing. Helping folks understand what is the power of crypto, what is the power of Web3, what change that's going to have on the macro picture in society, how that's going to empower consumers. I think those kinds of fundamental elements are really critical. Far more, and it has to be authentic. It has to resonate. It has to be factual. And I think we need more of that in this space as the space continues to legitimize and move towards mainstream. And a lot less of the fancy names and the fancy faces that we see in this space where, whoa, that got my attention, but what did I really take away from that? So I think I would like to see us do more intentional education that's on brand, that's authentic, that's real. The pros and cons, as opposed to, hey, look at this person with 30 million followers on Instagram.
Peter?
So from our founding through the end of 2021, I think we'd spent just less than $5 million in marketing in total. Most of that was to community events, conferences, that kind of stuff. So we didn't really do marketing. We were very focused on building products that organically acquired users. And that's where we've had the whole strength of our business is in sort of these almost zero cost funnels that acquire customers organically and through SEO and our data and media properties. We own one of the largest data and media properties in the crypto space. And so we tend to acquire a lot of customers from that channel. Over time, we've done a little bit more brand marketing. Like we'll do a little bit more this year in 2022, maybe a little more in 2023. Most of that stuff is oriented around other brands that we really admire or trust, and it's not usually oriented around people. We usually want to be identified with other institutions rather than individual people because people can have problems. but we don't do a lot of influencer marketing or anything like that. Honestly, the thing that I get most excited about is our support and education center, which is one of the most trafficked sites in crypto, and really helps try to teach people about crypto and even tells them about other companies' products. So we're not trying to tell people you have to use our product. We're saying, here's how to think about Bitcoin. Here's how you could use Bitcoin. Here's some ways to use Bitcoin, and about 500 other tokens, but it's just easier to say Bitcoin.
Very good. Jack, you want to wrap us up?
Yeah, just to hit on this, we've done influencer type marketing, and it can be helpful. One company that we started was a company called Hims and Hers, where we worked with, J-Lo, which she's one of the most popular celebrities out there, has one of the biggest followings on Twitter and Instagram in the world. It can be good for very broad products that you want to get into the masses. The thing that people don't realize as much about crypto is it's actually a much narrower audience that you need to reach to really get things to take off, which is why things like events and conferences work so well in crypto. It's really in-person things, it's spreading the word, and then it's a lot of word of mouth that spreads from that. If I were to say there are influencers in crypto, there are some YouTube channels actually where people have huge followings, and that's the way the word might spread farther. But it's not the traditional influencers and kind of celebrities that you would think that really have a lot of influence on this market.
Actually, and this is kind of a funny crypto story, but one of the biggest followings on a YouTube channel in crypto is this Web3 DeFi channel, and it's not a cool person. It's one of our most technical Solidity engineers, and it's his side project, and it's just like deep crypto nerd shit, and it has one of the biggest followings on YouTube, and I love that it exists.
That's great.
Authenticity.
Yeah. Oh. Well, you guys are authentic. You're cool. You're as humble as you are innovative. We appreciate you greatly. Thank you to everyone for having us. Hope you enjoyed this conversation. I certainly did.